Welcome to Stocks to Watch. Today's topic, investing insights, as we explore the world of commodities, investments, and markets with industry leaders. I'm your host, Ashley Berry, and today we're thrilled to have John Feneck, president of Feneck Consulting, with us. John's international firm excels in alternative investments, retirement, and asset allocation, consistently offering valuable insights. John, it's always great to have you on. Thanks for being here today.
Thanks a lot, Ashley. Always a pleasure.
So silver, I know it's a big commodity for you, number one holding. It's recently surged, breaking through the major resistance level of 26 per ounce. Which silver stocks are on your radar that could give investors significant leverage to this price appreciation?
Sure. So, as I always say, silver bugs are more rabid than gold bugs or any other type of investor that I've seen in the commodity space. And now that we've broken above 26, which was major resistance all of last year, 30 came into test, and that got broken as well on a Friday in May. Very bullish action, but we did say to investors we would hit some resistance between 33 and 34. We did, and now it's below 30 again, which is disappointing, but just par for the course. Silver always disappoints until it takes off, and then you'll be happy you had some. So that's why it is our largest holding, but I will say that the silver miners add a lot of value to portfolio construction because they have such torque to the price of silver moving up, right? And here's an example why. I'll give you two names: SilverX and Guanajuato Silver. So SilverX is AGXPF, Guanajuato is GSVRF. They both are silver producers. Guanajuato is in Mexico, SilverX is in Peru, but they're smaller silver producers, meaning that they're doing, a few million ounces per year. They're not doing 20 million ounces per year like some of these larger names. But you want to be positioned in these kind of names now because as silver moves, these companies have tremendous leverage to every dollar that silver goes up. So to give you an example, I interviewed James Anderson, the president and CEO of Guanajuato, a couple of weeks ago with my buddy Don Durrett. And I asked him a very blunt question. I said, you just did 1 million ounces of silver this quarter. That's great. You're averaging, let's say 4 million ounces for the next 12 months. Why wouldn't it be 5 million ounces given the fact that you have all of this, other production that's coming on? And wouldn't that be very, helpful to your share price? And he agreed. He said, we could do 5 million in the next 12 months, which would be a significant, increase over last year's production. And silver prices grow, they're lowering costs and silver's going up at the same time, right? So at 19 cents, I mean, this stock is trading like it's going out of business, and it's not. The way that would go out of business is if silver goes back below 18, right? We tested 18, I think it was like September of 2022. It was a long time ago. We don't think we're getting back to 18. We don't think we're getting back to 20. We think that 25 to 26 range is sort of like your new support level. And I saw a couple other, people that I compete with starting to say this on CNBC and different shows, Kitco, et cetera, over the last few weeks. So, we like both of those stocks for different reasons, but I'd say, you could buy some ETFs as well. You could buy SILJ, which is like the small to mid cap silver producers. That's our fifth largest holding, actually, in silver. We like Aftermath Silver, AAGFF. We've mentioned that on your show before because they're diversifying their portfolio into manganese. And manganese is one of those misunderstood critical minerals, that's top 10 on the U.S. critical minerals list. Let's be fair, it's probably 9th or 10th, but it's 91% produced in China. So, when you look at how little manganese gets produced in North America total, the fact that they came out in late February and said, hey, we found 99.9% manganese, which is battery grade, kind of just got lost in the market here, I think, honestly. The timing of that was somewhat not favorable for them because they had to raise money in March. So the stock moved on that news. Then it faded when they did the financing, and now it's back up to 23 or 24 US. But, it was doing a lot of volume above 30 US here recently. So again, you don't chase things as a value investor. You let it come back to you. So now that the stock has come back to you, buy some. That's what we do.
And great points. And I have to ask. I know that silver is your number one holding. Why silver? For those that may not be aware of the importance of it, everything that you just explained. Really in layman's terms, what is so attractive about it?
Well, like gold, it's been around forever. It's, a store of value, and many investors only see it these days as an industrial metal, which is a mistake.
Mm,
It is still a precious metal. It will trade like a precious metal in difficult times. The thing is, we're not in difficult times right now on the headline in the sense that we're not, in a pandemic, right? Silver took off. If you look at what happened in April of 2020, go back and look after the V-shaped move down, it took off in April, May, June of 2020. And that's what we're going to see again when we have the next unfortunate black swan event, which is imminent. I mean, imminent meaning like 12 to 24 months, right? You could have China invade Taiwan. You could have Russia win the war. They just posted some unfortunately good advances just today. I mean, like there's a lot of things that could get investors to think, oh, I need more safety in my portfolio. That's why we own physical gold, physical silver.
And speaking of gold, another hot topic, especially with its rally to all-time highs. So what gold stock should our viewers and listeners be watching closely, John?
Well, just like in the silver space, there's ETFs you can buy. So we own GDX and GDXJ, which are the two larger names run by Vaneck. But, that's sort of a core holding for us, at 11, 12% of our portfolio in those two ETFs. And then we'll buy other names in the gold space that may not be in those ETFs because they're smaller, right? And there's still a lot of upside in these names. So, we've been buying First Nordic here, FNMCF. I just did an event June 7th with Taj. Taj ran Discovery Silver up until I think last year, and produced ridiculously good returns for investors at the helm there for Discovery, which is the largest silver deposit in Mexico, and now is moving to a more of a gold story in Sweden. So I didn't know much about Sweden before getting into the stock. I did my due diligence, and it seems to be a very safe jurisdiction. So that's where we've been putting some money recently. Stocks moved nicely from 15 to 24 cents in a pretty short amount of time.
Mm.
But they have 2.5 million ounces of gold already. So when we look for those kind of things, actually, with a lot of ounces in the ground, as we say, it gives you a nice, you can be positioned nicely in a stock like that, knowing that they already have found X amount of ounces, right? It's not like they're just starting out and that there's more risk to those kind of stories, and we will still take risk like that. Give you an example. So Golden Caribou was also on my June 7th event, and I'm just mentioning that because Frank and Taj did a great job on that. So Frank Callahan manages Golden Caribou at the helm there, GCCFF in the States, GCC in Canada. They just came out with their first results this week that were substantial, but you know, it's early stages, right? It's not a First Nordic where they have all these ounces identified. But one of the things we also do outside of look at management, we look at the project and past projects in that same jurisdiction, and we look at jurisdiction. So
Mhm.
let's look at jurisdiction. It's British Columbia, not a bad place to be. Look at past producing areas of the world or what Frank's relationships look like, and you see that he sold his last project a decade ago to Osisco. If you look at the news recently, he's hired on some people from Osisco onto his team. It's like you look for these little synergies in news releases. There's no bell ringing in the background to
Mhm.
tell an investor, to put these pieces together. But he sold his last project a decade ago for 330 million Canadian. Stock's trading at 18 cents, right? Like this is the kind of stuff that we buy because we believe in a leader like Frank to get it done again. It's not going to get done 3 months, 6 months down the road. This is probably a 2 to 3 year investment. But to see something go from 18 cents to $1 in a hot gold market, that's where you make really outsized returns as an investor. I'm not saying that that's going to happen here. I'm saying that even if you go from 18 to 36, you make 100% of your money. It's becoming more and more difficult to find outsized returns in the overall market because we're already stretched, in my opinion, right? I mean, not if you own Nvidia, but like if you own most of the market, right? Like you can look at Tesla this year or over the last couple of years, not very exciting. even though it still gets all the headlines. And you probably saw Elon's getting, he's proposing a $56 billion pay package for himself. Not bad. Uh, I think it's gold is rallied. So now you have to look at, okay, if gold moves from 2,300 to 2,500, how
Mhm.
much money do I make? Not a ton, right? You're not going to make a ton. It's more of a safe haven kind of asset for a lot of people at this point, the physical gold or the ETF. When you look at gold stocks like the ones I just mentioned, there's so much upside. I mean, we own a lot of different gold stocks. We own 41% of our portfolio in gold equities right now.
Mm.
So, I would encourage people to look at that kind of stuff. Contact me directly. I'm happy to share a couple of names for free and then, introduce you to some of our services.
Yeah, I appreciate the story too, because you talked about the risk and it's clearly risk to reward. So I think a very important point there. Moving on to uranium, it hit its second highest spot price in over a decade. So do you believe the uranium
Yeah.
market still has, room to grow, or do you think this rally is just temporary?
I think it will grow. January saw us hit around 109 on spot. I don't think anyone had that in the cards that I was reading, maybe outside of guys that are particularly in uranium full time. But that is the second highest price print we've seen in a decade plus. So, that's very bullish action. What's interesting again is that the uranium equities popped on that news in January, February, even last year. But then many of them have faded since then. And yet spot is trading at around 81, 82 when I looked, yesterday morning. So it's like, yeah, spot's gone from 109 to 81, right? So again, like nice move down. Equities are down with that spot price decline. Why not do some homework on uranium equities that were flying high just a few months ago and see if the thesis has changed? I would argue that many of the companies haven't changed anything. It's just, part of the deal with investing in commodities. You have peaks and valleys, and you've got to have the guts to hang in there, and it's hard, and that's why it throws so many people off the horse, so to speak. You want to be able to put portion of your money in something like uranium equities. So a couple that we like are Forum Energy, FDCFF in the States. Rick has been in the uranium space for 40 years. So as a CEO, I know very little compared to him. As opposed, when I'm looking for thoughts and guidance on things that I may not completely understand, I would go to a guy like that and say, "Tell me about this." And he's always willing to share his thoughts, but he's also very like measured. I think there's a lot of promotional people out there in our sector, whether it's gold, silver, uranium, it doesn't matter. Rick, to his credit, basically just says, "Here's the deal. I mean, we're not going to be drilling for this many months, so our news flow may not be, as robust as the average client would like." But he has been telegraphing lately that they're getting back into the Theon Basin to drill, and that's what you want to buy a stock. Like the drill results aren't even the drills aren't turning yet, right? The drill results aren't here. I would argue that you have to go back and look at the September 23 news of what they did in the Theon Basin with 1/10 of the size of the drill program, right? They were able to identify a new deposit, and the stock went from 4 cents to 15.5 cents real quick.
Mm.
And by quick, I mean like a month. So you can 3, 4x your money in a month last year. That happened. This isn't speculation, right? So why is the stock trading now around 8 cents again? It's retraced from 15.5 to 8. Again, you're not going to get 4 again because now he's made a new discovery, right? But you could get 7 or 8. So that's why we would go and buy a stock back, even more here, knowing that they're going to be drilling going forward. Another name that we wrote up in our newsletter this week was Strathmore Uranium Plus, SUUFF. They haven't had much news flow lately, but they are in Wyoming, and
Mm.
they completed a capital raise about 3 or 4 months ago. And we wrote it up at 20 cents. It's at 24 cents now. So I mean, maybe we were able to introduce a few people to the name, but we basically just said it. It's retraced like all the way down to a support level that's almost like a 2 or 3 year low. It's ridiculous that any uranium name in a good jurisdiction would be trading there. And we like management. They've had a proven history of success with a decent capital structure, very very good capital structure, in fact. So we were buying that, at higher prices, roughly about 26, 27, and now it's at 24. So again, we don't always get the first entry point right. My first entry point on Forum was 11 cents. It ran up to like 17, went all the way to 4 last year, and we tripled
Mm.
our position. And now it's at, 7 or 8. So again, we're on a blended basis. We're actually flat to up on that name. And if we had just bought at 11 and 17, we'd be significantly down, right? So, like, those are the kind of things we try to teach investors, that you have to continue to, buy dips. Another one, lastly, is Peninsula Energy, PENMF. They had tremendous news just a few weeks ago that they were getting a huge cash infusion. And when you see news like that, it's important to know that the stock is not going to move up necessarily right away on news like that, but it's an indication that the project has merit. When you see 100 million plus, number for a 6 or 7 cent stock, like, you're like, oh, okay, someone's missing the boat here, and it's not that investor, right? Someone who's putting that kind of cash to work into anything sees something that the market is missing. And so we think that Wayne does a good job of running that ship. Another Wyoming story. I really like that state. I like the U.S. as a jurisdiction in general. There's just a lot going on, Ashley, as you know, geopolitically. And the more and more you take risks in these places of the world where you've never been,
Yeah.
potentially, or don't really have someone on the ground telling you what's really happening, I think, it's a good thing for investors to kind of just understand where they're putting risk, right? Like, just as an example, the largest royalty company in the world, Franco-Nevada, FNV, had a position in Cobre, Panama, and Panama pulled the rug on them, right? And Panama now is not investable, in our opinion. And so those are the kind of things that a year ago you would not say that. And here's the largest royalty company with a
Mm.
huge position saying that, taking that side of the trade. We had a zero weight on Franco. We had a zero weight on First Quantum when that news came out, because we didn't know anything about Panama. When you don't know something about something, why would you put money there without finding out about it, right? So that's kind of my thinking with why I like names like Forum, Strathmore, Peninsula. These are all in good jurisdictions with proven histories of success.
Yeah, what I'm hearing is obviously do your research, be patient, and also be prepared to ride the wave, right?
Exactly. Yeah, patience is required in this sector, and a lot of investors don't have that. And I get it. It's been a tough road.
Hmm.
I will just say that, with uranium's breakout last year, gold breaking out this year, silver and copper following, we're in a much better place.
Fantastic. So beyond uranium, silver, gold, what other commodities right now are catching your eye?
Well, we've mentioned this on your show before. I really like looking at some critical minerals that are maybe eighth, ninth, 10th, 11th on the list, as opposed to the obvious names, because some of them are really going to be more critical as we move forward. Tellurium, to me, is that. I didn't know much about tellurium 2 years ago. I met Ty Doherty, the CEO of First Tellurium, and he told me, hey, we're the only publicly traded tellurium junior company that anyone can buy in the States or in Canada. So when you have a unique opportunity like that, right, to give you some perspective, in Mexico alone, there are 90 silver publicly traded junior companies. Like,
Mm.
there's so many to choose from that it's difficult for investors to know the merits between one or the other. With First Tellurium, it's really easy. If you want exposure to tellurium outside of buying into a private deal, which is very difficult for most investors,
Sure.
buy that stock. I mean, Ty is doing a good job. If you look at the news, just about a week ago, Ashley, they attracted 29 million US as a $6 million market cap company that day. So it's a very small company. There's
Mm.
definitely risk. But how did they attract 5x their market cap from someone who only took 15% of the company? I mean, Ty's a really good negotiator. And I think people that have met him, at least my clients, have said that. They're like, this guy, really understands how to not sell the company at, for pennies on the dollar, like some of these junior leaders do, right? Well, let's face it. He's not interested in seeing the stock go from 7 cents to 10 cents and taking a 30% deal. Like that's not, you
Mm,
know, he wants to see this thing move up exponentially and then dump it on someone else down the road, right? Like, if that's even, the case. And guess what? As a 12 to 13% shareholder, he has skin in the game, so he's looking out for shareholders. That's another thing that we look for in a lot of the names we buy. We want to see someone aligned with us, and that's Ty, in my opinion. So I'd encourage people to read the public news. I mean, bringing in 29 million US basically pays for all of the marketing and the sales and a lot of the admin for that division of the company. And so I don't just see it as a mining company anymore. Now I see it more of a tech company because that deal was done on their thermoelectric device that has nothing to really do with some of their other projects, right? So it's little things like that that it doesn't happen overnight. Ashley, there's not going to be four analysts that are going to start covering the company like immediately, but it will happen, right? I saw this with a junior that I covered like 4 years ago. They had no analyst coverage. They started to put up good news results like we just talked about, and then they got two real analysts covering them, and the stock doubled like real quick because these analysts have so many followers of their own, right? And all it takes in junior mining is one or two entities to get behind something, I found, and stocks can move pretty easily.
Find that ambassador and be your own ambassador as well. John Feneck, president of Feneck Consulting, affectionately known to us as the market maven. Thank you for your time and for sharing your expertise here on Global One Media's Stocks to Watch. And we look forward to more episodes with you, John. Thanks again.
You too, Ashley. Thanks a lot.